Everyone, welcome to today's morning report on Friday, the 10th of July, with me, Rich Perry, market analyst at Hantech Markets. European trading session has got off to an extremely strong start. Greek proposals have been laid out, and it looks like they're going to be, well, basically, the ironic thing is that the proposals on the table seem to be more stringent than the ones that they voted no against in the referendum. It's a whole series of tax hikes and spending cuts and privatisation and potential pension reforms as well, seeming to be put before the creditors this weekend. Before that happens, they've got to put it through the vote in the Greek Parliament, and that is not necessarily a foregone conclusion, considering how they are more stringent than the ones that the referendum voted against, and there have been already noises out of Syriza, certainly the left of the party, suggesting that they are unhappy with this proposal. So it's not a foregone conclusion by any means that it will be passed by the Greek Parliament, but it seems as though if it does, then it will go to the creditors, and the market reaction today, certainly looking at sovereign debt yields in the Eurozone, if I can get them up properly, massive jump in the Bund yield. That suggests Bunds being sold. Spanish debt, which I'm taking as the periphery, massively lower on the yields, which suggests significant buying pressure through that as well. So big decline in the spread of core peripherals bonds, and that is can only be a good thing for risk sentiment. And it's basically what we're seeing throughout the markets: big jumps in the euro, in sterling, big sell-off in the yen as well. And pretty much equities across the board very strong. So happy days. I say happy days. How long is it going to last for? If it does get through this weekend, because without serious debt restructuring and some sort of debt reprofiling of any significant nature, I don't think Greece is ever going to get out this hole it's in. But for the near term, it seems as though markets are happy with this move. Anyway. That's the sort of outlook going into today. In terms of what we've got to drive the markets today, well, it's going to be obviously reaction continuing to this news out of Greece. Other than that, you've got the Canadian unemployment at 130, but that's expected to slightly tick higher to 6.9%. But yeah, that's unlikely to do a great deal for the markets, generally speaking. But that does take me to my chart of the day, which is the CAD, dollar Canadian loonie, which I showed yesterday in my webinar, has hit this 100% Fibonacci projection of this bull run from May to June, projected higher from that 21.24 key low, hit 100% Fibonacci projection of that and stalled. And the fact is that you've got the RSI up at 70. You've actually got a little bit of a sell signal on that RSI. Stochastics could be rolling over as well. And I would actually say that the moves that we're seeing latterly in the last few days is just a consolidation, which, yes, it hasn't yet turned into a correction, but the pressure is certainly on this big support that comes in at 26. If I get the crosshair up, come on, crosshair, 26.60. So that is your big support on dollar CAD. Obviously, this is a consolidation at the moment. We have no real correction has set in yet. But if it does, then it break below 26.60. That would signal, I think, the correction. Momentum indicators are interesting as well, because they seem to have sort of rolled over a little bit. If you started to see RSI falling back towards that sort of mid-30s level, maybe towards 30, then that would again be an indication, I think, of that correction possibly coming through, because you are beginning to see the dollar correct. Let me just show you the dollar index. Christ, I'm all over the place today, I'm sorry. Dollar index just slightly lower, so we could start to see some of these forex majors showing a correction, and dollar CAD could well be one of them. So just watch out for that 26.60 support, because it certainly looks as though there is the potential there for a correction, certainly considering the daily chart is up at this big key level. Also, if I zoom out, that is a massive overhead ceiling at 28.30 again. So big resistance coming in place. You've got the RSI stretched, stochastics rolling over. It could well be the beginning of a bit of a correction. Hasn't been triggered yet, I will stress on that. Has not been triggered yet because 26.60 remains intact, but certainly there are a few signs now of a bit of a rolling over of this dollar CAD, so watch out for this one. Anyway, I wish you good luck in your trading today, and I'll speak to you later. Thank you.